With Bitcoin's recent run up over 40% to nearly $100,000 per coin, so many new people are looking at the price of Bitcoin thinking, "I'll never be able to save up enough to buy a full Bitcoin." Well, imagine a future where you'd be able to save to own a single Bitcoin before you turn 50. It might just change your life. It's not just a dream, it's a tangible goal that's within your reach, even if you're starting from zero today. In this video, we'll unveil 3 powerful strategies that could potentially help you accumulate one whole Bitcoin before you turn 50. These aren't get-rich-quick schemes, but rather time-tested methods that harness the power of consistency, opportunity, and smart asset allocation. Imagine a world where every paycheck brings you closer to owning a full Bitcoin. This isn't a far-fetched fantasy, but a real possibility through the power of dollar-cost averaging. DCA is a tried-and-true investment strategy that involves consistently investing a fixed amount of money at regular intervals, regardless of the asset's price. When applied to Bitcoin, this method can be particularly potent. Bitcoin's price is notoriously volatile, often experiencing dramatic swings that can unsettle even the most stoic investors. By investing a set amount regularly, you're effectively smoothing out the price fluctuations over time. This approach mitigates the impact of market timing and helps curb emotional decision-making, 2 of the biggest pitfalls for investors. Consider the psychological benefits of automating your Bitcoin purchases through DCA. When you have a structured plan in place, you're less likely to panic during market downturns or make impulsive decisions based on FOMO, fear of missing out. This disciplined approach allows you to accumulate Bitcoin steadily, regardless of short-term price movements. The compounding effect of these consistent monthly investments can lead to exponential growth in your Bitcoin holdings. Starting with even a small amount and continuing to invest regularly can significantly outpace inflation and traditional savings methods. This growth potential is one of the key reasons why DCA is so appealing for long-term Bitcoin accumulation. Platforms like Caleb and Brown have recognized the value of DCA and offer tools to facilitate automatic Bitcoin purchases at specified intervals. This automation not only simplifies the investment process, but also encourages a long-term mindset, helping you avoid the pitfalls of trying to time the market. Click the link in the description to set up your DCA strategy today. While dollar-cost averaging provides a steady path to Bitcoin accumulation, savvy investors know there's another strategy that can amplify their holdings. It's a method that turns market volatility into a powerful advantage, allowing you to potentially acquire more Bitcoin for less. But timing is everything, and the risks can be as significant as the rewards. This strategy is known as buying the dip, and it involves purchasing Bitcoin during periods of downward price pressure. The concept is straightforward. When Bitcoin's price experiences a significant drop, you seize the opportunity to buy more at a lower cost. This approach can accelerate your Bitcoin accumulation by increasing the amount of Bitcoin you can acquire with the same amount of fiat currency. However, identifying true dips is not as simple as it might seem. The market is notoriously volatile, and what appears to be a dip might actually be the beginning of a more prolonged downturn. This phenomenon is often referred to as catching a falling knife, where an investor buys into a rapidly declining market only to see the price continue to plummet. Implementing a dip buying strategy requires careful allocation of your short-term savings. You'll want to maintain a cash reserve specifically earmarked for these opportunities. This liquidity is essential as dips can occur suddenly and unpredictably. By having funds readily available, you position yourself to act swiftly when favorable market conditions present themselves. Successful dip buying can have a substantial impact on your overall Bitcoin holdings. For instance, if you manage to purchase Bitcoin at a 20% discount during a dip, you've effectively increased your purchasing power. Over time, these strategic buys can significantly accelerate your progress towards owning a full Bitcoin. The psychology behind market dips plays a crucial role in this strategy. When prices fall, many investors panic and sell, driven by fear and uncertainty. In contrast, disciplined investors view these moments as opportunities, capitalizing on lower prices with the expectation of future recoveries. By maintaining a calm and rational approach during market turbulence, you can turn others' fear into your advantage. Integrating dip buying into your broader Bitcoin investment strategy creates a powerful synergy with dollar cost averaging. While DCA provides a consistent foundation, strategic dip buying allows you to capitalize on market inefficiencies and potentially accelerate your Bitcoin accumulation. This combined approach offers both stability and the flexibility to seize opportunities as they arise. To effectively implement this strategy, work with your personalized broker at Caleb & Brown to help you develop your framework that outlines your criteria for identifying dips to determine the amount you're willing to invest during these events, and to establish a clear risk management protocol. A well-defined plan can help you be better equipped to make rational decisions during volatile market conditions. Caleb & Brown's personalized broker service delivers a human touch. It's your new edge in the market. Make the most of your personal broker to stay informed and secure when it comes to your investments. The assets you've spent years building could be the rocket fuel for your Bitcoin journey. Converting long-term investments into digital currency isn't a decision to be made lightly. Let's examine a strategy that could significantly amplify your Bitcoin holdings, along with the critical factors you must consider before taking this bold step. Lump sum investing in Bitcoin involves converting existing long-term assets into a single, substantial Bitcoin purchase. This approach contrasts sharply with the gradual accumulation methods we've discussed previously. While dollar cost averaging provides steady, incremental growth, lump sum investing offers the potential for rapid acceleration towards your goal of owning a full Bitcoin. The allure of lump sum investing lies in its ability to maximize exposure to potential Bitcoin price appreciation. By moving a significant portion of your wealth into Bitcoin at once, you position yourself to capture larger gains if the price rises. However, this strategy also comes with increased risk. If the market experiences a downturn shortly after your investment, you could face substantial short-term losses. Various long-term assets can be considered for conversion to Bitcoin. Stocks, bonds, and real estate are common choices. Each asset class carries unique considerations. For instance, liquidating stocks might be relatively straightforward, but selling real estate could be a more complex and time-consuming process. Timing lump sum investments in the Bitcoin market requires careful analysis. While it's impossible to predict market movements with certainty, studying historical price patterns and market cycles can inform your decision. Some investors choose to split their lump sum into several larger purchases over a short period, a strategy that balances the benefits of lump sum investing with some of the risk mitigation of dollar cost averaging. Consider this scenario. An investor decides to sell an underperforming stock portfolio worth $50,000 and invest the proceeds in Bitcoin during a market dip. If Bitcoin's price subsequently rises by 20%, this lump sum investment would yield a $10,000 gain. In contrast, had the same amount been invested gradually over a year, the investor might have missed out on a significant portion of this price appreciation. As you contemplate a lump sum Bitcoin investment, develop a comprehensive framework for evaluation. Consider factors such as your current financial situation, long-term goals, risk tolerance, and market conditions. Establish clear criteria for when you would execute the investment and set predefined exit strategies in case of significant market shifts. The power of lump sum investing lies in its potential to dramatically accelerate your Bitcoin accumulation. When combined with consistent dollar cost averaging and strategic dip buying, you create a robust, multifaceted approach to reaching your goal of owning one full Bitcoin. This strategy leverages the strengths of each method, potentially shortening your timeline and maximizing your chances of success. Each strategy, in what I like to call the 3 pillars of Bitcoin accumulation, play a vital role in achieving your goals. The path to owning one Bitcoin before age 50 is now laid out before you. It requires discipline, strategic thinking, and a long-term perspective. Dollar cost averaging provides a stable foundation, ensuring consistent growth regardless of market conditions, while strategic dip buying allows you to capitalize on market volatility, potentially accelerating your accumulation. Finally, lump sum investing offers the opportunity to leverage existing assets for significant Bitcoin acquisition. Like this video if you found it valuable, and hit the subscribe button to never miss out on the latest videos from Bitcoin Basics.